So obviously we're looking at January this year. Overall, folks, Wellington values, they remain soft over the last few months. We had a little bit of a little show of strength in late 2024. We saw a little bit of recovery. Last few months been soft again. Lots and lots of supply coming to the market in sort of from about late January and continuing through early February. We haven't seen the results of the stuff coming on in February, of course. We've seen the results flow through onto TradeMe, of course, because that's live. But the impact on the market of all this extra supply, obviously won't be felt until the data sort of flows through. I can sort of discuss what we're seeing from a low and co perspective. We've got about a quarter of the Wellington market, so that's definitely a good guide as to what's happening out there. But message to sellers is that lots of supply generally just makes it tough. And as you'll see later, we now have more property for sale in the Wellington region on TradeMe than any time since May, I think it is, May 2015. So almost 10 years, we've never seen this much supply. So out of the peak of the market, we saw the supply ramp right up again. It came down a bit, then it went up again. It came down again, and then it's gone back up again, and it's surpassed those two quite recent peaks by a little margin. And so, yeah, we've now got more supply than we've ever had for almost 10 years. So that does make it tricky when you've got so much that you're competing with when you're trying to sell. It's great news for buyers. There's a lot to choose from out there. So it's a great time to be a buyer, get in amongst it, and take this opportunity to take advantage of the abundance of choice. All right, let's get into it. Median sale price. I continue to say this has been broadly stable since July 2022. We have seen over the last 4 or 5 months a reasonably consistent deterioration of median sale price there. But as you know, I don't pay too much attention to this because it does reflect the mix of properties being sold in the month, not just their underlying value. And so it can bounce around a bit. Obviously, any bit of data can bounce around a bit. The longer term trend is that's the 6-month average, the red line, and you can see there, yes, it goes overall, it softens a bit, then it strengthens a bit, then it softens a bit. Over the last sort of 12 months or so, it's been very gradually softening, but broadly going sideways. No clear uptrend, no clear downtrend since mid-ish, late-ish 2022. So let's look at the Real Estate Institute House Price Index. Oh, so you can see there, look, 750 in January versus 760 a year ago, so about the same. So the House Price Index, Wellington still has the auspicious privilege of leading these league tables. We've fallen further than any other region in the country at almost 25%. It's been around that number for quite some time. It sort of recovered a little bit in 2023. It deteriorated again throughout 2024. We saw a very gradual recovery, very, very modest recovery a few months ago, and it's come back down again. So you can see, look, most places are in negative territory, but nowhere like Wellington at 25%. And indeed, this is consistent with the new rateable values that have come out. So you would have seen big media articles saying, oh my goodness, Wellington rateable values have just come out. Prices have just fallen by 24% on average. No, prices have not just fallen by 24% on average. That happened 2 years ago, and it's been flat since. But the rateable values were determined in September 2021, 1 month before the absolute technical peak. So let's just call it was the absolute peak. And then they were reassessed September 2024. They've been about the same since then. So the drop between September 2021 and September 2024 in underlying market values was 24 and a bit %. So that's why you're seeing that drop in the RV, because the timing of it was absolutely perfect with the peak and it has really not recovered since the absolute trough. So you are seeing absolute peak pretty much to what I think is absolute trough. So that's why you've got that real stark result in the RVs there. Over the last year, similarly, Wellington has also fallen further than anywhere else. You'll see there that Northland has fallen almost as far at 3.5%. But otherwise, you know, we're definitely leading the pack on that front. Fallen twice the amount that Auckland has, and you know, three times or so of the nation overall. So Wellington market definitely has been weak over the last year. Over the last 3 months, very small drop there at 0.7% over the last 3 months. You can see there the varying degrees of, you know, it's pretty variable, the results over the last 3 months. Some places have grown a bit, some places dropped a bit. Obviously, the shorter the time period is, the more variable the data is, and so the longer the time period, the more reliable it is. But look, it's a consistent story. Wellington definitely has been weak. And there it is, the graph. You can see there. Look, we had big price drops in 2022. Then the market sort of stabilized late 2022, as I've been saying, from about July-ish 2022, broadly stable. Little recovery in late 2023 as we're heading into the election. You see there recovery late 2023. Throughout from the election, we saw weakness again, considerable weakness as the market was absolutely flooded with supply. And then we saw a bit of a recovery late-ish last year, as you can see, and then more recently, weakness again, unfortunately. Over the last year, there's the various territorial authorities. If you catch up on these calls, you'll know that this overall number at 4.4% for the whole region. These 4 numbers are for the 4 out of the 8 territorial authorities. So there are 4 TAs that are not represented in the Wellington region here individually, and that is Kapiti, Southern Wairarapa, Carterton, and Masterton. So basically, Wairarapa and Kapiti are excluded from those individual numbers there. But look, over the last year, you can see all week, all of the 4 main Wellington Central territorial authorities, especially Wellington City. I mean, 7% loss over the last 12 months. That's pretty painful in Wellington itself. Over the last 3 months, similarly, you see there Wellington City weaker than everywhere else. Some degree of variability there in the other locations. And there's the Wellington City numbers, and I think it's pretty remarkable to think, you know, if you went out there and asked someone on the street, on average, how much of Wellington City house prices changed or grown in the last 5 years, not many people would guess less than 1% per annum. So that's pretty remarkable. It has been almost flat over the last. Obviously, it hasn't been flat. It was up and then down. Well, up and down and then flat, or flattish. But yeah, almost no growth cumulatively over that 5-year period. So that's pretty stark, I think. 7% down on the last year, 1.25% over the last 3 months, and 2% over the last month. That number can bounce around a lot, as you can see here from the blue line, up, down, up, down, up, down. Not so much variability in the last few months, reasonably consistent. Actually, some growth, as I said, sort of late last year, and then falling off again more recently. So yeah, it's not happy times out there really for sellers and for property owners. Wellington values have been soft. Here we go into new listings. So there's the amount of supply coming to the market. And you look at the red line there, that shows the overall trend. So after the boom sort of came to an end, late 2021, massive increase there, followed by a big going on strike by vendors when they realized prices had softened massively. And then after the election, we saw the big increase in supply again as people dumped their properties on the market after election. And then more recently, late last year, we saw, or second half of last year, we saw supply slowing down again. And that's really what you want to see as a vendor, as a seller. You want to see less competition out there in the market. If the market is starved of supply, then obviously, less for buyers to choose from. They have to compete more aggressively, and that supports the market. So it has been a bit of a roller coaster ride. Look, real big up, real big downturn, real big up, real and significant downturn in supply again. But in January, 757, that's a big increase on the last two Januaries. So we had a lot of property come to market in January, 31% on a year ago and 44% on 2 years ago. Now, January 2023, nobody was putting their property on the market. Yeah, that's right. Nobody was putting their property on the market. Very, very few, excuse me, because prices have softened so much. So it's coming off a low base, as you can see here. But nonetheless, it's a big increase compared to the last couple of Januaries. That is good news for buyers. So yeah, new listings stronger than the last two Januaries. And if we look, there is the January average. So it's not only is it more listings than the last couple of Januaries, but it's more than we typically see in January as well. So a lot of sellers came to market in January this year. It's not just more than the last couple of years. It's more than we typically see as well. And there it is in this is saying how many more listings or less, how many more or less listings than 12 months prior. So this January, considerably more than the past January. We have generally seen more listings been coming to the market than 12 months prior over the last year and a bit. What about number of sales? This one has not been nearly so variable. So I personally am reassured by this. We have seen number of sales really hit really low levels after we hit the peak. Late 2021, here was the peak. You can see there's the actual peak. Sales volumes started slowing down significantly earlier than the actual value peak, and that's typically what happens. You see activity levels slow down before prices slow down. You'll see activity levels pick up before prices pick up. That's just kind of common sense. But really, we saw these hit real low levels around the 500, sometimes even below 500. Typically, we're between 600 and 800 in the Wellington region. So for some time, we've been below 600, but gentle, gradual, but consistent recovery over the last roughly 2 years or so. Obviously, there is some variability there, but that's the general trend, and that's encouraging. But as you can see there, sales have been recovering generally, and more sales than the last couple of Januaries, but still not, unlike the number of listings coming to the market, where we saw more listings than is typical for January, we didn't see a typical level of sales for January. So again, that's not an encouraging sign for sellers or potential sellers considering bringing the property to the market. They're seeing the upswing in listings outstrip the upswing, the recovery in sale volumes. So that doesn't lead to an easier market. Last month, I reported that it looked like there were some potential signs that we were seeing the market turning towards being kinder to sellers. These latest data do not support that, unfortunately. Fortunately for buyers. And there's the change in sales versus 12 months ago. So yeah, we are seeing some more sales than 12 months ago, but it's been generally more sales than 12 months ago, quite consistently, with a few exceptions over the last sort of 18 months or 2 years or so, nearly 2 years. So 341 sales versus 319 versus 265. So it's going in the right direction. How long is it taking to sell? The last few months, we saw reasonably encouraging results. It was coming down again, or a few months where we had lower, sort of around the early 40s. Well, we're right back up to 59 days in January, and you can see that blue bar chart. It's been some time since we've hit nearly 60. It was way back there in, what's that, February, I think that might be, 2023. So almost 2 years since we've had this sort of duration to sell. So that's not good, not a good sign. Again, if you've got new supply outstripping the sales taking place, that leads to a ballooning supply, easier conditions for buyers. Buyers can be more choosy. Things can take a little longer and stick around on the market a bit longer. So yeah, look, 28% longer than a year ago. but not quite as long as it was back in January 2023. That was about as bad as it got, sort of late-ish, or mid to late 2022, early 2023. You can see here that the absolute peak we got to, I think that was 69 back in very early 2023. There's January 2023 there, so that's the number we're comparing it with there in that chart there. And inventory, this kind of also makes sense that we get an increase in inventory if the amount of sales taking place is not keeping pace with the increase in the supply. So we've got 16 weeks worth of inventory. Compared to long-term averages, that's not a long time. It's 1 week longer than normal, as you can see there, for long-term averages. So look, broadly speaking, compared to long-term averages, that's about normal, 1 week longer than normal. It doesn't feel like a normal market because for the last 10 years, the average has been 10 weeks and we're at 16. So it feels a lot longer than that. But the last 10 years have not been typical. It was 7 years of an absolute boom followed by 3 very sluggish years. Anyway, so yeah, we have seen an increase back up to that sort of, for some time we were at sort of 15, 16 weeks worth of supply, or 14 to 17 sort of thing. A couple of months we came down. As I said, we did see some signs of strength late last year. Well, that's softened again, as has been a consistent theme throughout all of these data. And here's TradeMe, and you can see there that coming out of the boom, we had this massive increase in supply as you had a combination of sellers deciding, oh my gosh, we've hit the peak, quick sell, put their property on the market, at the same time as buyers also go, we've hit the peak. Whoa, pull back. And interest rates start to go up and so on. And then things got really tough, and so supply leveled out because vendors stopped bringing their property to the market. And as a result, then things got better and buyers started eroding the stock. And then as we came out of the election, we got all that stock coming back to the market. And this January, as I said, with a lot of new supply for the month, we've burst past those previous peaks, as you can see here. And we are now at greater supply levels than we've seen since way back here in May 2000. Whoops, that says 25. It's May 2015 is what it should be. Now, if I had the data, I do have the data going back to about 2012, not in this graph, and it continues up here. So it's been way more than this in the past, but not for a long time. So almost 10 years it's been since we've seen this amount of stock available on the market. So if you ever hear a buyer out there saying, gee, there's just nothing to choose from, give them a slap around the chops and tell them to wake up, because there's never been more to choose from for 10 years. Obviously, if you've only just come into the market, you just don't have this context, so you can't blame them. There's never enough to choose from, is there, when you're a buyer? Anyway, so we've got a ton of supply, and there it is in the 12-month most recent month compared to 12 months prior. We're still seeing increases over what we saw 12 months ago and have been consistently since the election. Basically, it's before the election we were starved of supply slightly. So there's a summary, folks. Wellington values have been weak over the last year, especially in the city. New listings have been up strongly. Sales volumes are gently but quite consistently rising. Duration to sell has taken a big jump up in January. Inventory levels are back up again, but only just a sort of slightly ahead of long-term averages, unlike what we saw in November, December, where we had quite reduced inventory levels again. That was looking promising. TradeMe listings up again, and more stock than we've had since 2015, as I said. Message to sellers is, yes, values definitely are lower than a year ago, especially in the city. It is still pretty tough out there. You definitely can sell, but you have to be pretty aggressive. You have to present the property well and price it sensibly. Otherwise, it tends to languish. Buyers, message to buyers, there's still lots and lots to choose from. And big thanks, as always, to Real Estate Institute and realestate.co, because that's where I get the data from. So now an opportunity to ask some questions or have a chat if you'd like to do that. Oh, I see we've got a few comments there that I never Pay attention. Here we go. Got some questions here. When can we expect vendors market to kick in? Zoe, that's the billion-dollar question. Obviously, I don't have a crystal ball. I do not have insight into the future. I'm happy to give you my opinion. I have detailed this opinion a good 2 or 3 times in the Lowdown podcast in discussion with Craig Lowe, which you can look at if you want to. It's quite fun, and we do detail some of the stuff that you can see it on YouTube or what's it called, Spotify. Anyway, last time we had a real weakness in the market after the GFC. The market really started softening from middle of 2007. Market prices peaked in late 2007, much like we've seen in 2021. And Wellington values, they dropped and then they went sideways for 7 years. So including the year where it dropped, it didn't drop the same degree as it has this time. It dropped by 8 to 10%. But if you include that, it was 8 years waiting for a sustained recovery in Wellington. Now, Auckland recovered 3 or 4 years before Wellington did. Will it happen the same way this time? Don't know. One reason why Auckland recovered strongly ahead of Wellington and other places last time is we had this migration happening, and there was a real stranglehold, a real suffocation of construction. There was really very little construction happening in Auckland. We've got a slowdown in building consent and a slowdown in construction, but we haven't got the same slowdown to nearly the same degree as we saw last time. So what shape is it going to take this time? So last time it was 8 years before Wellington sustained a recovery. That's a long time. Is it going to be 8 years this time? I don't think so. But we've already had 3. And is it going to be 1 year? Is it going to be 2 years? Is it going to be 3 more years? It's hard to know. But we've got a few headwinds and we've got one main tailwind. The main tailwind, of course, is reducing interest rates. But we've still got some serious headwinds in the form of increasing unemployment still, and general economic malaise, and a lot of Kiwis leaving the country. We've got very, very slow net inbound migration, and the migration we are getting is a loss of Kiwis, and typically they, I believe the belief is that they're better quality people are leaving than are coming in. And of course, the people coming in, they're immigrants. A lot of them can't buy. So these are significant headwinds for the real estate market. My hope and my suggestion as to what may happen is with stability in the marketplace and interest rates coming down, and as we see unemployment, stabilizing and not more job losses, generally just get confidence back in the market. We've got a lot of sellers who have put their plans to sell on hold. There's only so long they can rent for or postpone their move or whatever. So they will come to the market as they see stability and interest rates dropping and so on, and more buyers returning. At the same time, we've got a lot of buyers who put their property plans on hold because they were losing jobs or worried about losing jobs, because they saw interest rates going up. They were scared about that because they had prices dropping. That all has changed now. So I think we'll see buyers come back to the market also. So if we see both buyers and sellers stepping forward to the market, then I'm hoping that will enable greater liquidity. We'll see more sales taking place, but with demand and supply increasing, that doesn't really suggest prices are likely to race away. So my personal pick is, at least in the next year or two, pretty modest price gains if there is any. So yeah, the thing to look out for if you're wanting a return of a vendor's market is you want to see supply levels eroding consistently, and that tends to typically that will start obviously from a real abundance of supply. And certainly what happened last time is the supply was consistently being eroded for quite some time before prices started going up, because there was just plenty of excess supply to be mopped up before there was any real genuine tightness. So you probably will see, you probably will get some warning, some foresight into that, if indeed we see increased, continuing increases in the amount of supply, especially. So if you're thinking, look, I want to sell, but gee, I'm going to wait for interest rates to have an effect, and that might be later this year or something, I personally wouldn't be counting on it. If you have genuine reasons for selling, and you're buying and selling in the same market, especially, then I wouldn't count my chickens, basically. So I don't know if that answers your question, Zoe, but hopefully. And if you want specific to, what kind of property are you thinking of and that sort of thing, just give me a call. Happy to talk, because there are definitely different segments. Some segments are really there's quite good activity in them. Other segments, really hard work. So yeah, happy to talk if you want to. Lingjin, is that how I say your name? Some questions. Do we know the number of current Wellington region house supply compared to its population size? I don't have that data, but population growth in Wellington is very slow. Wellington is not a high population growth region. And so you could go to stats and look at population growth, and then you could also look at building consents. But building consents is new supply coming on. It's not the gross number of houses. But the other place actually would be the census data. And my understanding is Wellington, the ratio of population to households is about 2.7, and it has been, I believe, quite consistently for about 10 years. So the housing stock in Wellington has broadly been keeping pace with population growth. That's anecdotal only. I've not actually dug into that. Question number 2, is there any research being done about what drives the big percentage of house price drop? Has there been any research? I don't know. I haven't seen any. But there are a number of things that, generally after COVID, the cities have fallen out of favour. So you see the biggest price drops in New Zealand are Auckland City and Wellington. So the regions have fared better as more people place higher value on lifestyles, gardens, outdoor living, more space. There's still a hangover from the whole working from home epidemic. Obviously, it's sort of waning, but nonetheless, still there's a difference. But people still prefer, for example, suburbs to central apartments. There's still more strength in the regions than there is in the cities. So there's that whole lifestyle side of things. Wellington City did see a lot of strength after COVID, and I don't really know why that is, why the growth was so strong there. But yeah, no, I don't really have the answers for you on that one, I'm afraid. But yeah, it certainly is the case that the city has suffered. Peter, thanks very much. Yeah, you're welcome. So what's happening in the rental market? Rental market is very weak. There are always, again, different segments in the rental market, and in particular, the student rental market is very, very poor. People with 4-bedroom, 5-bedroom, 6-bedroom, 7-bedroom places that are typically student stock. A lot of them are having to take significant reductions in rent. I've got a place on the market at the moment, say 5-bedroom house. It's not in the city, it's sort of city fringe-ish, and nice and sunny, close to shops and everything. Not an easy walk to town. But anyway, that was previously rented at $1,200 a week. It's now available for $1,000. And so there are people with that sort of property around. That student market really weak. Other people I know taking reductions in their rent of hundreds upon hundreds upon hundreds of dollars a week. So it is tough out there in the student space because student numbers in Wellington have taken a hit. It seems Victoria University, from what I can see, did not do a good job of I don't know, maintaining their value proposition or whatever. For some reason, they took a big reduction in their numbers. I believe the same pattern happened elsewhere, but it seems to be quite accentuated at Victoria. They had from 2021 to 2023 a reduction of 15% in full-time equivalent students. They were flat from 23 to 24, and I believe, I haven't seen the data, but I heard anecdotally a small recovery from 24 to 25. So that's encouraging. As a result, the university has a lot of capacity in the halls of residence. So I understand they're offering rooms to students if they want to stay on after year one. Typically after year one, they come out, go into the private rental pool. Well, that exodus out of the halls into the private rental pool not been happening quite as much. And so that segment of the market particularly soft. 1 and 2 bedroom places, city fringe, central locations, well presented, that sort of thing, they have been the most robust segment of the market. And generally, tenants are also, just like I was talking about before, preferring places with gardens and decks, and they are preferring, there's been more strength in the suburbs compared to the city than has typically been the case long term. So definitely rental market has been tough over the last 18 months. And there's some really good data out there from John Butt. And that shows, for example, that the ratio of rents in Wellington as a percentage of average household income, I might not get my data quite perfectly correct here, but I believe that ratio of rents versus household income has never been lower since, I think it's 1992. So if that's right, over 30 years, rents have never been cheaper in Wellington relative to average income of a household. So yeah, that to me, that suggests that when demand does come back, and I think it's pretty safe to assume that the amount of supply or new rental accommodation being bought or supplied into the market has really been at low levels because the business case for investors has been completely crushed. That when the demand does come back, there is, and some people will really not like me saying this, and I risk being cancelled by saying this, there is plenty of headroom within the typical household budget to pay more rent before we get back to what is typical levels of the percentage of household budgets being spent on rental compared to the long term, let alone being a high number. So I think, when that does happen, I believe we're going to see strong increases in rents again. Oh, goodness, Zoe, yes, you've got lots of good questions here. If you were to invest outside of Wellington, where would you go and why? There was a stat of 4.8% for Taranaki. Yeah, well, okay, that could be anything. Unemployment, who knows? But if I was to invest outside of Wellington, I personally would be investing in Wellington City, Auckland City. That's where you've seen the lowest growth in values over the last 5, even longer years. That's where you've got the most robust employment. That's where you've got, it's just safer investing in the big cities, personally. And Tony Alexander also used to do some fantastic numbers showing the relative values of locations compared to their long-term trend relative to other locations in the country. And Wellington City and Auckland City way below trend in terms of value. So the buying in Wellington City and Auckland City really good. You don't need to go anywhere else as far as I'm concerned. 4.8% was in one of the graphs you showed, but it flipped too fast. Oh, I see. Well, yeah, I don't know. Send me an email if you want more, or if you've got a particular situation or advice on your particular situation that you want to talk about. Okay, folks, unless there's anything else, we'll call it a night. And thanks for checking in. And if you need any, as I say, any individual advice or anything, you know how to get me. I'm Adam at Low & Co. Otherwise, take care out there. Have a good month, and yep, see you next time. Thanks, everyone. Bye.